Yeah, Michael, I was actually in your neck of the woods a few days ago at one of your local parks, and I saw a black swan. And it made me start thinking about quite a few things to do with analytics. And the reason for that was because back about 20 years ago, there was a book called The Black Swan by Nassim Taleb, which was about the possibility of improbables happening. He was using this as a theory to sort of second guess markets. And he actually managed to sort of second guess. He almost predicted some of the crashes that happened in the 2000s. So it's it's a clever idea. But as I started to think about it, he called it the Black Swan because the Black Swan, we knew it existed, but what were the chances of actually finding it? And at that time, I was looking at the numbers. In the UK, there were only 20 breeding pairs of Black Swan. Today, 20 years on, there's 120. So it's no longer seen as a bird that's on the verge of extinction. Strangely, though, in New Zealand, it's common. So it's really one of these sort of strange things about the black swan. And as I started to think about it, I started to reflect on a couple of stories. One of them was SiteMind had come out with a statement regarding the improvement in occupancy and in revenues in Los Angeles. And what they said was, yeah, things are improving, which is good. We're coming out of the pandemic. It's good that they're improving. But then they sort of they said it's all to do with it was like staycations was the thing, and as I started to think about it, I thought it's rather obvious because it's been literally closed off from the rest of the world. What else could it be? Okay, and at the same time, a number of magazines, actually hotelier magazines, published data for August this year, 2021, in which they said, "No, we've had very strong." Occupancy and profits are really good, and they were comparing to March 2021, which is when the pandemic was in some respects at its height, where every hotel was closed. So as I was starting to think about this stuff, I was I remember there was a line in a film in which a character says, "Water is wet, tell me something I don't know." And this really seems to fall into that bracket. Yes, you've got all this analysis, but it's just telling you things that actually common sense says this is what you should have to be told. This, this is common sense. So your company, obviously, Atomize, do a lot of work on AI and in analytics. Our company does as well. And I was really thinking about what does this mean in terms of analytics? If people are saying, "Wow, it's wonderful," if we're saying things that are really, really common sense side of things, how do we then what should they be looking at? How should the analytics be in some respects authenticated that it's doing a good job? Because if it's simply saying the obvious, one could argue that that actually what is the purpose of the analytics? So really it really comes down to how do we almost really gauge, is the analytics doing its job? And in some respects, one could argue that that's also an important feature of even having to talk about analytics, because how do you then differentiate yourself from those people who are just stating the obvious? So I just thought, I'd like to get your thoughts on that particular topic.
Yeah, so it's interesting in the predictive analytics space, which is where Atomize operates in. So we're not analyzing data retrospectively. We're analyzing data in real time and sort of trying to predict demand for future dates. And one of the things that happened during the pandemic was people immediately said, history has no relevance. Revenue management, going back over the past decades or so, essentially looked at historical patterns and tried to determine, use those patterns to determine future demand. And because of the pandemic and the unpredictability and the uncertainty of the pandemic and the demand patterns as a result, the common assumption was history has no relevance. And to a large extent that was true, but it wasn't entirely true, because even during the pandemic, there were some days that looked like days in the past. A typical Tuesday during the pandemic may have looked like a typical Tuesday in 2019. So to throw the baby out with the bathwater was the wrong approach. At Atomize, we dynamically balance the historical data with current data. That's the pickup and the pace of a hotel. So in terms of actual production that they're seeing, but also further supplement that with forward-looking data that is giving indications of future demand that is anticipated, but it hasn't yet booked hotel rooms. And we look at search pressure data on websites, airline traffic, and things like that. And we don't fix a certain percentage or weightage to any one of those three data sets. We dynamically incorporate the data based on what we can see. So on one particular day, history might have 100% relevance, where the patterns or that future demand mirrors a day in the past, and the algorithm will detect that. On another day, historical data may have very little relevance, and we'll then shift the focus more to the current and the future looking data. So I think it's, as you said, I think it's easy to jump to assumptions, assume that history has no relevance and that all revenue management capabilities and demand modeling is going to be based on forward-looking data, but that's not true. I think history still has a role to play. The success or the secret is really to determine which data set is most relevant and which one to apply to a particular scenario.
Yeah, I mean, one of the things is actually looking, when you look backwards, and this is my own experience of doing the things that we do, whether it's fraud control or looking at competitor analytics, it's actually putting the data into context, because it is so easy to look at the past and think, oh my God, it was terrible. But you forget that actually there were other events that made it terrible, or it was incredible. And you think, wow, what a great marketing exercise. And actually you did nothing. And one of the things that comes to mind, I don't know if you remember when the volcano erupted over Iceland, and Heathrow Airport basically was ground to a standstill, as were many airports. Everybody had to stay in their hotels. Where else were the tourists going to go? They couldn't go back. And our data was fantastic. But actually, marketing had done nothing. It was just a consequence of what happened at that time with the ash cloud. And I think that sometimes when we look at numbers, without that context, we can very, very quickly assume things that if you just have a conversation piece, straight away, you remember those events because they were so big, but we don't represent them within the analytics, because it's almost like we've gone past that date now. Whoever updates anything that we've gone past.
Yeah, and I think that's where predictive analytics allows you to validate that in real time or close to real time. You make an assumption based on the data and the context that you're seeing. So let's say a hotel is seeing strong pickup, and the assumption is that there's strong demand, and therefore you can you increase price. You sort of do your price sensitivity calculations. And as a result of that increased price, you expect certain outcomes. But because you're doing it in real time, or certainly a company like Atomize is doing it in real time, you can validate those assumptions and readjust. So if the resultant pickup isn't as expected, so you saw a surge of bookings, assumed that there was higher demand than normal, pushed the price up, and then didn't see the results of the continued pickup, then the algorithm will reevaluate and reassess the market demand and adjust prices accordingly. So you have to not only sort of take the context into consideration, but you also need to validate the assumptions that you make as quickly as possible.
And one of the good things about taking that approach is that one could argue technically you can compare yourself against your prediction as opposed to your historical assessment. So therefore, as you're predicting, one would think you're actually taking into account some of the context around what's happening, and therefore maybe it's less of an issue. Whereas those people who are just going by pure numbers based on pace reports, etc., from the past, it's just pure numbers. There's no context, and in some respects, one can argue those numbers get distorted because there's no context.
Yeah, that's right. And one of the most common questions I get from people evaluating whether they should deploy an RMS or not is, what's your forecast accuracy? And that in itself is sort of a nonsensical question in many respects, because if your forecast on let's say 60 days out, you're forecasting something that happens, and an event happens like the volcano, clearly that's going to affect your forecast accuracy, because new information has been introduced, a new situation has been introduced. So whatever you were forecasting prior to that event taking place is no longer relevant. So you have to reassess it. So at the end of the month, you comparing your 60-day forecast or your 30-day forecast to the actual to what was actually produced can be very misleading, because it could mean that if you aim to hit your forecast, you could be leaving a lot of opportunity on the table, not capitalizing on that, and likely if the reverse is true. So our answer to that is we have to model in real time, and assuming that all of the recommendations were accepted, assuming that there were no unusual events that occurred between us making that initial forecast and the end date, then you can evaluate how accurate our forecasting was. But the reality is things will always happen between now and day of arrival, especially when you're looking at 60 or 30 days out. And you shouldn't use that as a determinant of whether the system is performing well or not. In fact, arguably, if it exceeds forecast and captures all of the opportunities that arise as just between now and day of arrival, then it's doing its job. It's not the forecast accuracy that is the be all and end all.
Yeah, I suppose one could argue. I mean, the most important thing that I personally feel that people forget is this concept of you're leaving money on the table, because it's hard to gauge that even happens when things move so quickly. And unless you're predicting, you don't know what that's even occurred, because when you go back, it's so easy to find an excuse as to why you did so well, even though you may not have done well.
Yeah, exactly. And and even just by accepting or not accepting a rate can influence the outcome. And if a rate is not accepted, a recommendation is not accepted, that immediately invalidates that forecast that you've just made. And so it's a very, forecast accuracy is a very complex thing. And as I said, not really a true gauge of whether a system is performing optimally or not. You've really got to compare yourself to the market and how you did relative to your comp set and the market in general. Did your hotel perform better than what you would consider your comp set and the market in general?
I mean, going back to my Black Swan example, so if this book was now written today, where the Black Swan is now not as is no longer on the potential extinction list, you'd assume the author would choose another animal. So if I use that as an example, as you're predicting, one could argue that your comp set needs to change, because those comp sets personally, I tend to think they don't change. Too many people just, whatever they set up 10 years ago is still the same comp set. So actually working out, is your comp set even the right comp set? Technically, one could argue that is part of the predictive elements of actually saying, well, are these making sense?
Yes. Yeah, and more we're starting to see sort of dynamic concepts coming. I think companies like OTA Insight are now starting to explore that further and look at the whole market and really try and hone in and understand, because your comp sets change day of week, season, things like that, business versus leisure. You have a variety of comp sets, and they've got lots and lots of data now to start determining who your real comp sets are, and we can see that as well. We can start seeing which hotels actually take business away from you if they drop their prices, and which ones don't. They just because the hotel is located next door to you doesn't mean that they're a true competitor. So it is. I mean, your competition matters. I think that's self-evident. If a hotel, if I have a choice between booking this hotel or that hotel and everything else is equal except the price, clearly the price will have an effect on my decision. But it requires much deeper analysis than just a sort of a hypothesis like the one I've just stated. So yeah, analyzing the data and really determining who your true competitors are at different days of weeks, different seasons, things like that is really important. And the information is getting better, it's improving.
Yeah.